Welcome back to Uncontested Investing. I'm Tim Harris. Thank you for stopping back by. Today is week 2 of my 8-week Boardroom Mastermind series, and I've got my good friend Greg Herlean here. Greg, thanks for being here.
Thanks for having me, Tim.
So, Greg, you're the founder of Horizon Trust Company. You're an active member of the boardroom.
Mm-hmm.
You help moderate, and you're also in the long list of people that Kent tells people not to go out with at night. For me, it's me, you, and actually our next week's guest, which is Justin Colby. So that was I knew I arrived when I was mentioned with you in that category.
Yeah. Well, look, I feel good because in the past, before you were part of boardroom, it was always like, well, you're out with Herlean, and now they say, well, you were with Herlean or were you with Tim? Like, who were you with? And when we're together, it's even more, but it's good. We like to let loose a little bit, so it's all good.
It is fun. So, Greg, why don't you just take a minute and just tell the audience a little bit about yourself?
Yeah, so I, in my early 20s, actually I was 23 years old, I got into real estate. I started flipping homes. I dropped out of college and started flipping homes, and but I didn't, what got me in my current business is I didn't have any money when I was in my 20s. My family didn't have any money. And I was like, how am I going to go find financing? I didn't know a Tim back then. And so I was trying to figure out, where am I going to find money to go flip deals? And banks wouldn't lend to me. And so someone had taught me at a very young age about self-directing IRAs. You can use someone else's IRA to go fund a deal. And then after you flip it or whatever, you can pay back their IRA and their profits or interest, and you keep your share. And so I was 20, this is, not the most educated way of explaining it, but that's how I felt at that time. Like, okay, use someone else's IRA. Sure, I'll figure it out. And I did. And I did it a few hundred times. And after I did it over and over and over and over again, I figured out that I really got a passion for IRAs and kind of how that whole process worked. And so 15 years ago, about 6 years after I did so many homes, I then got really good at IRAs and self-directed IRAs and how they work and helping other people unlock their retirement accounts. And so again, I fast forwarded through probably all my hurdles, right, of all the failures I've had. But along the way,
don't worry, we'll get to that.
Along the way, I started, in real estate. I got this passion for retirement accounts because it helped fund my deals. And then I started a company that helps individuals unlock and use their retirement funds. And so that's in a nutshell. I'd say that's what it is. But along the way, also, I should share, I've had 5 kids. And so when you mentioned kind of jokingly about staying out late and having a good time, I will say for me, business is just as important as family time and quality time with my friends and family. And so I work hard at that, not, again, jokingly, when we get together, sure, but I work hard at really traveling and being with my family and also building the business. That's what I've been doing.
Well, I think that's a common theme that I would say, I won't say the more successful, I'll say the more experienced entrepreneurs have to learn. Mm-hmm. And sometimes we learn it the hard way. And you and I talk probably more about football mm-hmm. than our sons mm-hmm. than we do IRAs or financing, right? And I want to dive right into that because as we live here today, you said you're a Bears fan, which I'm sorry, and you said you're a Raiders season ticket holder.
I am. Yeah.
Sorry for that.
Yeah, and tough. Those are two.
You have horrible taste in football, is what we've decided here. No, really, talk about that. Maybe talk about how did you learn to prioritize your family just as much, if not more, than business?
Look, that's a good question. I remember years ago, I was at, a mastermind of some sort, and I was sitting in the audience, and this guy comes up and he talks about, owning your schedule. This was like 13 years ago. And he's like, who here are, CEOs of their business or owners? And, everyone raised their hands. And he's like, do you own your calendar or does your calendar own you? And I was like, and I know that might sound like a simple thing, but I was like, I do what my calendar tells me. So my calendar is the CEO. I'm not. And so literally at that moment, I also heard, not at that moment, in that same hour presentation, I also heard something really important about my kids. I learned at that moment that I only had 10 years left with my kids at the house. And so I was like, okay, I have 10 years left with my kids at the house. My calendar owns me. I've got to fix that. I literally left that meeting And I changed my calendar. I informed my staff of when I'm going to work, what hours I'm going to work. And I totally, I made it so mornings were very different. I took days off and I just put it all on my calendar. And then I went back to my staff and said, this is my new schedule. It's got to fit in there. And that was a life change for me, not only because I was able to balance my time with my family, but I started making more money. And that was the coolest part, working less. And I know it's touche a little bit because on social media, everyone's like, passive income and work less, make more money. None of that bullshit. It was like real, like my time mattered. And I took it that way, and my staff knew about it. It's one thing if you want to like set your schedule and you put it in your own calendar, like, hey, this is when I'm going to have free time. But when you tell everyone that you work with, this is my calendar and my schedule, and this is why it's so important to me, everything changed. And so I will say, because I have some older kids and some younger ones, that I was right about the timing, because it's been about 10 years and I've had such good quality time with my kids. But I will say, you only have them till they're 13. Like, you're there with your son,
Yeah.
like right? Yeah. So you don't have them till they're like 16 or 18, because once they're like 14, they're with their friends. 16, they're gone. So if you have kids, like, you only have that much time with them. And for me, that's been super important to me. Now, it's so important, Tim, I don't know if you saw this or not, but I got 4 kids that are older, and I have a 2-month-old now. So it's that.
I remember. Yeah.
So, and that was not a mistake. It took us 3 times an IVF to have. So partly did that because my 2 oldest left, and I was like, I really like this experience. And so some people think I'm crazy. I'm in love. It's so beautiful. In fact, you'll meet her. We brought her along here today. So anyway, so it's been super exciting.
You're right, and that's why. A couple weeks ago, I needed to go to New York for some meetings, and I knew the school year was about to start, and it's 8th grade, right? Like, he'll be driving soon.
That's right.
Everybody fly up to New York, and we'll spend the weekend in the city. And called my oldest son. He's going to be a pilot, so he's going through a lot of training. He's like, hey, can you take Friday off? He's like, yeah. I was like, all right, fly up to New York too. Like, we'll spend time in the city. And my wife, at one point, she goes, you sure are spending a lot of money. Like, we rented a helicopter to go to the airport and stuff like that. And I was like, baby, I don't know if I'll ever have both my boys in the city with me again.
100%.
It's just like, and we took a car up to Mystic, Connecticut, which there's this awesome restaurant called Red 36 on the water, best lobster roll I ever had in my life. I just wanted to share it with him. And it was that Saturday night, my oldest son, the 22-year-old, he goes, I had the best food day of my life. And it's
he'll never forget that.
He'll never forget it. And the little one, and they're arguing about which pizza's better, New York pizza or Connecticut pizza. I actually kind of
Chicago pizza.
If I want dough, I'll get bread.
Okay, all right.
No, look, I like Chicago pizza. So yeah, I mean, I'm with you, and there's been a lot of times in my careers that I lose track of that. So other than that one time. And by the way, if you're listening, you know that I don't really talk a lot about real estate, but you may not know that. I mean, this is the important stuff that entrepreneurs need to hear. Other than that one person that you heard talking about, does your calendar own you? What have been some other resources, tips, tricks, things you experienced that have helped you not only, I'll say, grow your business?
All right.
The right way.
Pretty easy. There's a couple things in my life, but First, I would share that for the longest time, probably 10 or 12 years, like half of my career, I had a couple things going, basically a plan B. And once I decided about 13 years ago that there was no plan B, I didn't need to have 2 or 3 different business funnels. Now, I know this is contrary to, I think, what a lot of people share. Like, hey, I meet these real estate guys who they're like, oh, and we own the title company, and we own this, and the mortgage lending company, and the insurance. That's all a distraction. As soon as I pivoted, now I was making good money, but as soon as I pivoted and had no option B, I went all in the paint on the one business. It went crazy. The valuation went up, the income went, everything, and life was better. So I'd say that's probably a huge thing in general as far as business goes, is staying in your lane, doing it better than anybody else. And then I'd say as well, an obvious thing that you've kind of taught me this, or reminded me this in the boardroom, is giving first. I feel like I was a pretty good giver, but you showed this so well, where you are giving to the 10th degree. And you're not looking for anything in return. It's like, look, if I can help this individual in their business or in their life, then you're going to do it. And I think I learned that. It took me a little longer to figure that out. But as soon as you learn that, and actually you don't have any other motives when you're meeting with somebody, it comes back tenfold. And so I think that was a big game changer. And then lastly, I'll share, man, I can go on and on, but the other thing is I am, again, contrary to probably what most people say, is I am a no debt kind of guy. I like having my homes paid off. I don't like carrying any debt. And the reason for that is I'm a big proponent in sleeping better at night. Now, for some people, not having debt and having more money in their bank account makes them sleep better at night. So I'm not here to say like my method is better than your method, but for me, if I know my house is paid off and I have X amount in the cash in the bank, I can sleep better at night. And when you sleep better at night, you make better business decisions, and you're also obviously with your family life is better. So it's about sleeping good at night.
So I love business debt. I don't love personal debt.
Mm-hmm.
I mean,
Agreed.
I'm completely with you on that one. Obviously, I love business debt since, I do like 150 loans a week.
Well, I like that debt too.
Yeah. So this is interesting. Horizon Trust now, you're the founder. You have someone that runs a company?
Yeah.
So you are, if we go to the Robert Kiyosaki quadrant, right, are you the business owner now or are you the investor?
I'm the business owner. I'm still actively involved in, executive meetings, but I don't live there primarily, so I'm not present. I'm on Zoom meetings, et cetera, probably like once a week. But it's not completely passive by any means. Every time I try to make something passive, and this is something I've learned recently because I see it in all social media platforms, about, buy this, whatever, and you're going to have this, passive income for life. Again, bullshit.
Yeah.
The second you go passive, the second you step away, not the second, but weeks, days, months later, your business is going to either flatten out or go down. It's not going to keep growing. And I don't care who you fucking hire. Sorry. Can I swear or no?
We can beep it out.
Okay, beep it out. Thank you. So it doesn't matter who you hire. If you are the owner, and there is a difference being in your business. And so you can work less. And so anyways, so for me, I'm an active owner, but I'm not there every day with the executive team.
When I think about all the different things I'm involved in, and, RCN Capital is a great example. I mean, I'm an employee, but I'm also a part of the business ownership group, right? But it kind of dictates my calendar, right? Like, I mean,
yeah.
It still controls my calendar a little bit. And then there's other things that I invest in, like commercial and multifamily, that I don't even know the addresses of the places, right? I just know that I get an income statement every month, and I kind of look over projected versus actual. And if you're at or above projected, like, we're good.
You're good.
Right? If you're below, it's kind of, remember that. I still don't need to do anything, but if we're below 2 months in a row or 2 quarters in a row,
become a little more active, man.
Probably need to call someone,
Yeah.
right? And I think that's kind of your point. And also, I love your talk about these people vertically integrated. Oh, I've got the title company. I'm going to be a hard money lender. I'm going to be an investor. I'm going to be a flipper. I'm going to be a landlord.
Yeah.
You end up being, the commitments become the master in those situations. I completely agree with you.
That's right.
So we recently decided to shut down kind of the long-running wholesale operation I've had in Dallas, and it's hard to shut down something that makes you $1 million a year.
Mm-hmm.
I mean, it's hard. I mean, and that's where we got our rental properties from, right? But I'm at that stage now where when I look 5 years down the road, when Will graduates high school and goes to college, Jennifer and I, we're going to be overseas. We're going to be at the ranch. We're going to be at the mountain. I don't want to have to talk to a property manager or even the president of a company that I own.
That's
right. Like, because even as the chairman of the board, you still got to be in those executive meetings.
Yeah.
And then I think, but with anything, there's a season, right? Like, you go through the season and then
There is. And look, and I still look, I am an investor. I'm still a real estate geek. I love these commercial projects, in particular in the West, because I'm close to there. So when there's problems, I can fix them. but I do probably 2 to 4 deals a year that are between $2 and $4 million that I'm an investor in. I look at the numbers, I get the pictures, couldn't tell you the address, don't want to tell you the address. But to your point, when I see there's a problem or it's taking longer, I ask questions. So I'm still engaged from that perspective, but it's an investor. I'm an investor in it. Unlike a business like Horizon Trust that I'm more actively engaged in. But that is the goal on that is to exit it and build it to the right multiple and exit someday. So yeah.
So I'm going to take a quick break, and I want to come back and ask some things about IRAs, the trust company, and really trends and savings, et cetera. Stick around. We'll be right back. Here at RCN Capital, we understand that everyone's financial needs are different. Whether you're pursuing long-term or short-term ventures, our wide range of loan programs will help reach your financial goals with ease and flexibility. We have loan programs for fix and flips, long-term rentals, new construction, and multifamily properties. And don't forget to ask about our Platinum program for experienced investors. To learn more about our loan programs or apply, click the link in our bio or email info@rcncapital.com. Welcome back to Uncontested Investing. I'm Tim Harridge. I'm still here with Greg Herlean. Greg, coming out of the pandemic, American savings the savings rate was at an all-time high. Mm-hmm. People's IRAs, 401ks, stock equity accounts were at all-time highs. The cash in the bank was at an all-time high. Mm-hmm. That's not where we are anymore. The savings rate is going down. I read last week or the week before that 401k withdrawals are ticking up from where they were before. Could you maybe talk a little bit about the IRA market in general, how that's going, and maybe any trends or developments you see happening?
Sure. Look, I mean, it's in my space, because we are a self-directed IRA custodian, we're in the alternative asset space. So for us in general, anything that's trending, anything good or bad in the market is good for us. When it's just kind of stagnant, and kind of the same, nothing much changes for us. The good news is it's almost never stagnant. There's always something. There's always wars. There's always, the COVID. There's, Bitcoin, all these kind of crazy, things that are happening. And so for our industry, which I can speak probably more of on the self-directed space, it's been really good. That being said, I mean, the market is the market. So in general, let me tell you, there's 94 million IRAs in the United States, a little more than 94 million IRAs, which represent over $11 trillion. Only 4% of Americans self-direct, which is probably appropriate, by the way. Maybe it should be a little bit more, but that's one of the messages I share is like everyone shouldn't self-direct. Not everyone understands or can take the time to understand where they're going to put their money.
Right.
But I would say a lot more than than the 4 to 5% that are self-directing should be doing. I will tell you from our portfolio, and I read probably the same things you're reading. People have, gotten a little more, wet feet on, the market in general. And I've seen that in our portfolio as well. We've got about $1 billion in assets and that we hold, which is it's small in general, but still it tells me a little bit what's happening is every quarter I can see what people are investing in. And look, during COVID, Bitcoin kind of went up. People were investing in Bitcoin. I shouldn't say. I did it for a second because my son told me I should buy something. I put $10,000 in it. It was a mistake. I wasn't one of those guys. I'm not like I don't flip those kind of things. Just Ethereum. Yeah. I mean, that's what I bought because he said to do it. And, my little, at the time, 19-year-olds, like all the other 19-year-olds. And so I was like,
the Robinhood account.
Yeah. He probably put more in. I don't know. I don't want to know how much he put into it. That being said, look, there's trends. And right now, people have been, and from our portfolio, been trending more in the cash. And also they're kind of sick of their financial advisors. And so what I'm seeing in today's world are people are trying to be more active and engaged in their retirement funds. And so, but look, there's more cash out there in our accounts. But I would also say people are taking loans more than ever. So to your point, 401ks, because you can borrow against your 401k, people are, before they had all this COVID money, right? All this free cash. Well, that free cash is all gone, right? So now that people are taking from their retirement accounts. But even more what I'm seeing are people just liquidating their retirement accounts. So they're cashing out, paying their taxes and their penalties, and then using the funds for whatever it may be, which is the worst thing somebody could do. So it's the market's been interesting, and I just see more of the alternative asset stuff. And so it's interesting to see how that kind of wave changes from cash to real estate, different real estate markets and submarkets, funds. And, right now, actually, I'd say is because of today's, place in the market, I see way more precious metals. People are using their retirement accounts to buying gold and silver.
Really?
Yeah. Which is, it's kind of been a constant, but literally in the last quarter, it's doubled.
Wow. Yeah. So, it's counter-cyclical, right? If you turn on the news, all you hear is recession is coming, is coming, is coming. So people go into precious metals as a safe haven. And then, I was talking to this, I got pitched a multifamily deal that was at a 5 cap. And I said, look, why would I do that? I can buy a 12-month CD and get 5.5% interest. Right. Why would I? Oh, well, we're going to lever it. Oh, that's stupid.
You put risk to it.
Yeah. Well, yeah. In general, cap rates should not be below interest rates. Right. That's negative leverage.
Uh-huh.
So I find it also an interesting time. And my wife and I are sitting on a lot of cash. And if the deal's not right, we'll buy a 30-day CD. If you've got $1 million cash sitting there, you might as well just park it for 30 days.
It's crazy not to.
Yeah.
It's crazy not to.
And short-term rates are high.
Yeah.
Not high, but high relative to recent memory.
Well, our trust company is, we've got about $180 million of client idle cash. And we can't invest it. We can only put it in banks. But, it's making 5%. So I'm doing the same thing. When I've got cash, I don't mind sitting and waiting for that sweet deal that comes around. And in the meantime, I'm making 5% of my money.
Yeah.
Yeah.
And that's just, that's where we are as a nation. You were talking about alternative assets and kind of some of the trends you see. Let's go on the real estate side. I'm very interested. What are people pursuing? Are you seeing more private lending? Are you seeing, one of our most recent investor sentiment surveys said investors don't really want to flip houses right now. They're really looking for rental properties. What segment of, let's just say, multifamily or single family are you seeing more of a trend?
Well, people that are using their retirement accounts and investing in real estate, I'm seeing primarily in multifamily and in funds. And so way less flippers. That was, before COVID, that was happening a lot more. I think it'll go back to that again, but right now it's tougher. So it's multifamily and funds. People are liking investing in, Reg A, Reg Ds, private placements, private lending, which is in my opinion, the right thing to do, because I used to see lots of individuals investing in single family properties that have little to no experience. Investing in these larger experienced funds, in the long run, are almost always better. And I share that from a personal perspective too, because it's sure, you can make 20% of your money. Got it. 30%. Cool. But the 1 year that you make negative 30%, right? Now you're doing exactly what the stock market does.
Right.
So my message in general is look, you're investing in experience. Invest in people that have been doing it for a while. Sure, get out of the stock market. I'm not a stock market guy. I got it. I'm a real estate guy. Invest in real estate, but find the right real estate people. Let them do the work. And if you're earning, in my opinion, 10% to 15% a year, anywhere, 10's fine too. But doing it in a place where you're not paying taxes, everyone else is typically investing their non-IRA money in these kind of vehicles. The compounding your profits and interest I'll outperform anyone else and get the lesser returns because I'm not paying taxes. And so that's my message for people that want to get into real estate. Don't do it, first of all, absolutely. But don't just go and flip a property or lend on this little deal unless you really know that person and have a good relationship with them.
So when we were at the boardroom together and someone starts talking about they need to capitalize their company or they need to borrow money or they need to raise private money, you're the de facto person. Everybody's like, talk to Herlean. What are some tips you have for the audience? If someone's out there and they're thinking about maybe approaching a friend or family member that they know has an IRA, how do you go about, what are some things that people need to know about how to go about raising capital?
Look, that's the $1 million question, and I've done
Billion, you said, right?
$1 billion question. Yes. Look, I've done it several times, and so in the same, the opposite of what I just shared with you applies as well. Meaning, after I flipped like 10 or 12 deals, and I thought I was like, an expert, and I was 23 years old. I wanted to scale, right? Still couldn't scale flipping 12 deals. So I put together a business plan, and I was like, okay, I'm going to scale from 12 to like 30 in the next year, and I need X amount of dollars, but I don't have it. And again, a bank's not going to lend it to me. So I said, well, why not find an investor with their retirement funds, let them partner with me in my new business, so I now have the cash flow that I need to pay for marketing and staff and acquire more assets. So that's exactly what I did. So to answer your question the long way, if you're in a place where you have a business or you want to start a business and scale it and you need capital, one of the best ways of doing it is finding individuals that have retirement funds that are sick of the stock market. And that individual, by the way, could have, let's say, a $100,000 or $1 million retirement account, and they don't have to give it all to you. They can leave $900,000 wherever it's at Charles Schwab, move over $100,000 to a company like ours, which then in turn can lend to that individual and their business and give them equity in that business or an interest rate, whatever the terms are that you two agree upon, which is kind of the cool part about self-directing is you don't have to like give up half your company, even though they might fund 100% of it. When I did this example, I raised $250,000. I was 25 years old. I gave up 20% of my company, and I raised 100% of the proceeds that I needed for the next 18 months. I paid myself out of that $250,000 a $50,000 a year salary. At the time, $50,000 was probably like $250,000 because I was like, okay, but that took a little pressure off my shoulders because I didn't want to just do a deal to pay the bills.
Right.
So, but I need a little bit of runway to build the business. So I raised $250,000, gave up 20% of my business. Again, I was young, so I still owned 80%. And I had individuals with IRAs come in and partner with me, so I didn't have to give them a fixed interest rate, give them a piece of the deal. And then I had a term where I could pay them off and buy back my equity within 5 years. And they were comfortable with that as well because they're like, you know what, $50,000 for whatever percentage that is, 5%, 6% or 4%. Sure, I'll try it out. I believe in you and I like you. And so my message for those individuals that are trying to raise money, this is that there is literally trillions of dollars on the sidelines of people that have IRAs, and at least 5 or 10% of them, $1 trillion, are out there not liking the stock market. Don't be afraid to go find your next partner, could be for a deal or for your business, with someone with an IRA. The process is simple. It's been around since the 70s. I think that's the other thing. People think that I'm telling them something new. Like, this has been around since the 70s. And most people just don't know about it because their advisor doesn't want to tell them about it. But look, the government, the rich are using it. The wealthy keep getting wealthier using this concept. So don't let that be you. If you have a good concept or a good business and it's working, you want to scale it. This is one of the best ways. I've done it now 3 times. I actually started. It's a longer story, but I started a trust company before I started Horizon Trust Company 2 years beforehand. And I had an individual with an IRA fund the capital requirement I needed to start a trust company with his IRA. It was bad. I mean, so I used the exact thing to start that business.
Well, and when you really look at the reason businesses, I won't even say fail, that they struggle or may not succeed at either the speed or the plan is often just being undercapitalized.
100%.
I mean, and by virtue of my financial education with Blackstone, like, I understand the importance of a corporate model. Right? I mean, I've got some cool models. I mean, you can go to tab number 9 and input a number, and it trickles all the way back. And so often we only know to think about profit, not cash flow.
Mm-hmm.
And in this business, you can definitely get real estate rich and cash poor.
100%.
So an IRA can buy assets,
mm-hmm.
but you're saying ownership of a company is an asset as well.
Correct.
Even if it's a private company?
Correct. Yeah. So, and I'd say 30% of our clients are doing that. 70%, 60% is real estate, 30% is business, 10% is that precious metals, crypto, random other things, good or not good, whatever it may be, but mostly good, to be honest, in all those categories. But businesses is a big deal. And look, the best example is you can Google Peter Thiel. I don't know if you remember, if you've seen he bought his equity in PayPal. He didn't personally own it. His Roth IRA owned a small percentage of PayPal when he created it. Well, small percentage, like 25%. That $5,000 investment in Roth when he sold was a few $100 million. So he got few $100 million out. This is approved by the IRS, right? And will never pay taxes on that money.
We know they looked at that.
They did look at it. They changed the rules. You now can only make $10 million a year in your IRA because of him. But that's still, I think that's enough space for everybody. So my point is that you can invest in new businesses, new equity opportunities. I do that still today. Like it's kind of like a venture capital thing. If they come in and I really like them and their idea, I'll put $50,000 in my IRA as a passive investment with my Roth IRA. And if it does great, obviously there's zero taxes on it ever. So we have lots of people that do that. Lots.
Well, and there's so much speculation these days about, taxes are going to go up.
Mm-hmm.
You want to pay your taxes now. I hear a lot of people say this. Pay them now because the government's going to change it to 50%.
Mm-hmm.
I don't think they ever touch IRAs or 401ks. Do you?
They don't really. I mean, look, the rules change every once in a while, but usually it's like not big changes, and it maybe not for decades. So
it's not retroactive, right?
Well, not. They haven't done that, no.
Yeah.
And could they? Sure. But my opinion is if you have a retirement account and you think you're going to invest in some, you're going to start making 10, 15% annually and or in a new business, it wouldn't be a bad idea to convert some or all of your IRA to a Roth IRA. Just some of it even. You can convert a percentage of it. So if you convert a percentage of your IRA, let's say you have a $100,000 IRA, convert $50,000 of it, pay the taxes now. Now you have a Roth. That Roth can be your deal-making Roth, right? We're going to invest in Tim's business because I think Tim's going to get my 25 grand into 100 grand in the next year or 2 years. That would make sense for individuals because then it doesn't matter what the tax rate is in 10 or 20, 30 years when I go to retire. So there's little rules, but those kind of rules don't change much with the IRS. Yeah.
Well, and I think, the government needs people to save, needs people to put money into the equity markets,
yep,
right, into treasuries. So I don't think they touch that. I want to talk other than crypto. Or you can talk about crypto if you want to.
No, I can't really.
But what are some stupid things people do with their IRAs that they shouldn't do?
Well, that's kind of a little easy one too. I mean, I think when it comes to real estate, there's a lot of stupid things. Promissory notes with zero collateral, that with zero experience. Now, I understand promissory notes. I like them in general, but where people make mistakes is Johnny just lending to Paul, and it's a promissory note that Paul is doing his first or second deal, has zero collateral. Promissory notes are one of the biggest mistakes, if not done with the right people. And then these same thing with these businesses. I'd say the mistakes are inexperience. It's always going to go back, in my opinion, of documentation and experience. And so those two things I think are probably best said for any investment, who you're investing with and the documentation. The problem is people quickly will go all in. So they'll talk to John or get a referral of Paul, whoever it may be. I'm going with all these apostle names right now. I'm not sure why. So they get all hyped up and they put their whole retirement account with one individual, with very little experience. And so you're probably looking for like very specific deals.
This is great.
But for me, it's the documentation and experience. And I just see people doing it over and over and over again. Look, there's Ponzi schemes, that happens. And so when you get into this alternative asset class, which is why I say it's not for everybody, you got to know who you're investing with. We do, we're not a fiduciary. So when you work with our company, we don't say, hey, you should now invest your money with so-and-so. We don't want that responsibility. But we do, a backup, a background check on any sponsored investments. That's all we do. And so, but they typically aren't bad until they become bad.
Right.
And so, look, experience, get referrals, invest less money in one particular asset class if you're new to it. And then I spend the extra money. And the big thing that I say to people is, if there's so much hype and you have to do it, you probably don't have to do it. And so what I say, that the phrase I use is no is not final and yes is. What does that mean? Say no. You know why? Because even though this is the best deal ever, and you just said no to it, and because your wife or your partner said to say no to it, right? We all have those, right? No, don't do it. It's crazy. And you're like, this is the best deal. She just doesn't get it. Say no, because guess what? Tomorrow you're going to get another effing phone call. There's going to be through every terrible market, there's been a good deal. I mean, 2009, I flipped more deals in 2009 than I ever did. And that was a bad market.
Right.
And so say no, because once you say yes, you're effing committed.
Right.
So it's okay if you say no. And so that's how I feel about my IRA. I have a self-directed IRA, obviously. And there's literally 3 or 4 months a year where my money is in my account earning nothing. And I'm at peace with that because I know I'm waiting for the right deal. And sometimes if you jump at something, losing money is worse, right? It's the worst direction to go. So be patient, make good decisions on what you're going to invest in. And if you do nothing for 3 months, some of my clients were thanking me because they moved their money from the stock market to me. Then they were pissed at first, like, oh, I don't know where I'm going to invest the money now. Now I'm earning nothing. But if they would have stayed in the market, they would have lost another 10%.
Right.
So anyways, those are a couple of things.
Yeah, and it's interesting. One of the things you said is, yeah, sure, I'll throw 50 grand into that. And that's kind of been my philosophy as I've looked at syndications, other investments. I would rather sprinkle $50,000 or $100,000 into 10 or 15 deals, right? And like because one of them will most likely lose money.
Yep.
Or even if 3 of them lose money, if the other 7 hit the 20% IRR target, we're good.
You're gold.
Right.
You're gold. Yeah.
So we're going to take a quick break and come back and do the Money Minute. So stick around. We'll be right back.
REI Inc. is a monthly business publication for real estate investors, covering all types of real estate investments and strategies. It is the most comprehensive real estate investment publication on the market. All of the articles are written by the top leaders in the industry, so investors are assured of always getting the best information possible. Each month, REI Inc. also profiles the top companies in the industry and provides insights and data into key regional markets. Along with their sister platforms, the REI Referral Network and Highest Invest, real estate investors have exclusive access to off-market investment opportunities and national acquisition and disposition initiatives. To learn more, visit www.rei-inc.com, where you can also access the REI Referral Network. Also, be sure and visit www.highest-and-best.com to view the latest exclusive off-market assets with near immediate acceptance decisions and closing strategies. You can also email marketing@rei-referralnetwork.com to request more information.
Welcome back to Uncontested Investing. I'm Tim Harridge. I'm still here with Greg Herlean. Greg, it's time for the Money Minute. I want you to imagine there's an investor out there, an entrepreneur, that is only going to get 60 seconds of advice this month. That's it. They're going to hear what you say for the next 60 seconds, and then they're done. So it's got to be the best stuff. It doesn't have to be about IRAs. It doesn't have to be about real estate. Whatever it is, the best advice you have for entrepreneurs out there. You ready?
I'm ready.
Go.
So my advice is finding somebody in your area that's doing what you want to be doing. I think if you can shave off 5 or 10 years of learning from somebody else in those mistakes, that's the best advice. It's something similar that I did as well. But by doing so, even if you're willing to work for free, just think about that. If you could just work for free for somebody that you know, like if you could work for Tim, say, Tim, don't pay me anything. I'm just going to do anything you want. I'll get your dry cleaning. But if you're around successful people in a space you want to be in, you'll shave literally years off of your experience of building your business. Go do it and give. Do it for the right intentions of just giving. You'll learn relationships. You'll learn, the different business, even if you want to be in it or not. Think of it as an education. How much do you spend or do people spend in education already? They'll go to 4, 8, 12 years of college, and then maybe they want to go start in that career. Go learn it now, work for free for 3 or 4 or 6 months, and it will be the best education you ever get.
You know, it's a bit of oversaid, started from the bottom, now I'm here. But when I got out of the Marine Corps, my first job was as a project manager for a house flipper. And what you just said is so true. I learned more in that first 6 months about this business, about traffic, about personalities, about the way contractors are. Like, you learn just so much when you immerse yourself in that ground up mentality.
Yeah, people right now just want to read books or watch videos and don't actually put in the work. That's the only other thing I'd add to that is do what I just said, but what I just said is work. Like, it's uncomfortable. Like, you still might have to do your night job. And that's what people, it's funny. I have some, like, in my staff too, will be like, hey, I want to, like, work less so I can put the, 3 hours less a day so I can put it in my new business. No, when you want to be an entrepreneur and start your business, you're going to double your work. You're going to work 100 hours a week. That's okay. So if you're not willing to commit to it, look, doctors do, almost all professions do it. You go to school, then you have a job, then you do your homework and you study. They're putting in way more than 100 hours. Commit to it. If you put that much time into your business and dive in deep, you'll have success.
Well, one of the big headlines right now is how we have a pilot shortage in the nation.
Yeah.
And my son, it was 4 or 5 years ago, found a love for flying. And when he was done with college football, decided he wanted to be an airline pilot. And I said yes. And $250,000 later, he's not an airline pilot. And he graduates this semester, and he'll be a flight instructor and a private pilot, which means he'll need about another 150 or 200 hours before he could even fly for FedEx.
Mm-hmm.
He'll need another 700 or 800 hours before he could pilot the little bitty plane for American Airlines, right? So he's now put in 4.5 years of college, and he has 3 to 5 years before he can finally do what he wants to do. So I think, and that's just one example, right? And now the nice thing is, though, now he's finally at the phase where he can get paid to continue
those hours.
Right. Yeah. He can get paid as a flight instructor, which is
it is a huge shortage. So, I mean, this is if he wants to be in it, there is a ton of opportunities.
Well, it was interesting how he picked it. We did this, there's this tool that I use, and if you're listening, I'm happy to give it to you. I call it the goal wheel, right? And so you kind of, at the center, you write down 4 goals of, like, anything, right? And then that's the 5-year goal. So then you got to go out 3 years out, and for each one, there's 2 that feeds into that. Then you go 1 year out, and for each one in the middle, now there's 4 on the outer ring, right? Because I was trying to show him how you got to start taking steps. And what led him to being a pilot was we were talking about, I said, what do you want your week to be like when you have kids? Like, let's just start there, 10 years down the road. And he was like, well, I want to be a lot like you, man. I don't want to have to go to the office every day. I want to be around. I want to be able to coach. He was describing this. I said, okay, well, how many days a week do you work? He goes, ideally, like 2 or 3.
Mm-hmm.
And I was like, okay, well, I mean, firefighter.
Yep.
They work 24 on, 48 off. Pilots, I mean, once, you got to put in your chops at the beginning, but it gets to where, some of these captains that are our age, they work 5 days a month.
That's right.
And so it was kind of funny. What guided him to that is the way he wanted his life to be. And then he found a career that he loved that could meet that desire, right? And so, but it's still going to take a lot of work.
I'm a little bit in the aviation investment business and as an investor, and in the last 2 years, what we pay the pilots, it's gone up like 15 to 20% just in 2 years, and that's just their base. Now there's all these other incentives that we have to pay them, and we have a shortage. It's hard to keep, and they only work 14 to 16 days, and at least in this business, a month. I mean, and people will leave this business to go work for American Airlines because instead of 16 days a month, they get to work 12 days a month.
Right.
I mean, so it's a good industry to be in for sure.
Yeah. And I mean,
maybe not from the investment side, but
well, the finance side. I thought about financing some of that aviation education.
Well, the tax write-off side.
Well, talk about tax write-offs. Hey, we're going to run out of time soon. So, Greg, if there's someone out there, they're listening, they think that Greg guy is cool, I'd like to be involved with him. Do they just go to like horizontrust.com? How do they get in touch with you?
Yeah. You can go to my website, gregherlean.com or horizontrust.com. Ask Tim. Tim can connect us. We're here to serve as well. Like if I can help any one of your people or listeners, and I'll do it any way I can.
So, man, I appreciate it. So, Greg Herlean, gregherlean.com, and horizontrust.com?
Correct.
All right. And set up an IRA. I have several. You'll be glad you did. I mean, it opens up options. And I'll tell a little funny story. A couple months ago, my oldest son wanted to make some money, and I said, "How much cash do you have?" He had like $4,000 or $5,000, and I said, "Great, I'll partner up with you. There's these 2 lots that someone told me about that we can buy for $8,000."
Yep.
And so I paid for my half with my IRA, my Roth.
Yeah.
He paid for his half with cash.
Yeah.
And then we ended up, we made like 15, 20 grand. I don't remember.
It's huge.
But I when I split it with him, I said, "Now here's the cool thing. I made 30% more than you." And he's like, "What are you talking about?" I was like, "I'm just telling you." Like,
On the same investment.
yeah, the same investment. So that was, now he's like, "I need one of those."
That's the best example. Like,
Right.
That is the example. That's why you do that. Yeah.
When your partner is 50-50, but is making 20 or 30% more than you, it's time to copy that partner,
Yeah.
right?
Yeah, exactly.
Well, man, thank you for being here. Look forward to hanging out with you here in Austin. That's it for today. Remember, your network is your net worth, and today you've been growing both. We'll see you next week.
Thank you for listening to the Uncontested Investing Show. Questions about today's episode or the podcast? Email podcast@rcncapital.com and make sure to follow RCN Capital on Instagram, LinkedIn, and Facebook. See you all next time. The preceding program is furnished by RCN Capital LLC. The information provided is for general education purposes only and does not constitute any legal, financial, investment, or other professional advice. The views, thoughts, and opinions expressed by any speaker are the speaker's own opinion and do not represent the views, thoughts, and opinions of RCN Capital LLC. No information contained in this episode should be construed as financial, investment, or legal advice from RCN or any individual, author, host, or guest. You should always consult a financial advisor before investing.